This conference will now be recorded.
Good day, everyone. I am Steve Saminsky. On behalf of Wealth Foundations Northwest, I'd like to welcome you all to the weekly prepper, getting you ready for the week of June 22nd. Happy to be here with all of you. Just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form. Trading does, in fact, involve risk. All right, so I expect to have a normal schedule this week. And as far as the eye can see, maybe things will change a little bit as we get into the 4th of July week. So, those of you who are subscribers, happy to have you here with us. And please spread the word and reach out to me anytime you want here at Wealth Foundations Northwest. And we'll go from there. All right, so seasonality still suggests softness here between now and the end of the month, and that things may perk up a little bit here after we get into the first week of July. So, net, don't expect much this month, and we're sort of getting into the heart of the summer doldrums. And according to the mid-election year, this is an election year seasonality. So this is based on past history. Don't know exactly what's going to happen, but historically, this is a weak to sideways part time of the market. So you got to be a good stock picker. You have to do things like watch your weekly prepper, listen to your Uncle Steve's, try to find good sectors and stocks within those sectors. So the major markets did gap up early in the week, okay, on the Iran deal, and then faded somewhat throughout the week. And the crude did drop below $80 per barrel. So it's sitting around 78 last I checked. And the thing that really kind of was disturbing to the markets came on Wednesday when the FOMC held rates steady, but everyone expected that. That was no surprise. But gave kind of uncertain guidance. There's some talk about reforming how they do things, and so that led to very uncertain guidance about what's going to happen with interest rates going forward. And people are actually talking about, oddly enough, raising rates. And so instead of getting cuts, which people were potentially forecasting between now and the end of the year, now it seems more likely than not, as of now, according to the CME tool, that we'll have rate increases this year, believe it or not. So don't fight the Fed. But the thing is, Wall Street doesn't really know what to make of Warsh. And so the new Fed chairman. And so it markets don't like uncertainty. Okay, they didn't really like what they heard, and so I think it leads to a market that's unsure of what the Fed's going to do, and that's a little bit destabilizing for sure. The economic reports, however, were good, and one of our basic tenets here is that don't expect markets to crash and burn if the economy is generally good. So the retail numbers, manufacturing numbers came in pretty well. So when the dust cleared, and this is after the gap, okay, so actual numbers might be a little better than this for some of these things, but after the Monday morning gap, basically what happened after that. So the S&P sagged, the Russell sagged a little bit, and the Qs ended up positive on the week. Gold was negative. Gold did gap up a little bit, but was negative on the week. Oil definitely way down. Bitcoin is still struggling to get out of its own way. And so at the end of the day, the strongest sectors were industrials, utilities, and technology. And the weakest sectors last week were real estate, healthcare, and of course, energy, as the Iran deal and the oil flowing through the Strait of Hormuz is making oil prices come down dramatically. And so on Friday, technology was very strong. For the week, technology is still strong. And for the month, technology is still strong. Industrial is really coming on hard, though. And so there could be a play somewhere in the industrial sector. You can see things like GE have done phenomenally well. Even Boeing was up for the week. Some of these defense stocks, kind of a mixed bag in the defense stocks, and a lot of them don't have very liquid options, very widespread. So I usually don't trade things like that very often. But Boeing is tradable. if you like that. But the heavy equipment, the farm folks did really well. But look at this strength still in semiconductor equipment was definitely a strong point, and semiconductor in general held up very, very well. Not so much NVIDIA, but Avgo, Micron, all did very, very well. Google, Amazon, not bad. Apple, not bad. But really, the big strength still in semiconductor industrials. Some of the financials, select financials, did quite well as well. But look, there's a lot of red on the board here. Healthcare, terrible. Energy, terrible, of course. Consumer defensive, soft, and so real estate really had a bad week for some reason. So looking ahead, you got to think of this as kind of a late stage bull market. And what's concerning a little bit about this late stage bull market is it's being led by a relatively small number of stocks. So as long as that semiconductor play is in force, and as long as tech can drag everything kicking and screaming higher, that could work for the overall markets, keeping the overall markets propped up. But really, you need to watch for the overall breadth. Is there anything else? So if semiconductor should happen to take a breather, or technology should happen to take a breather, is there something where that money is going to rotate into another part of the stock market, not into bonds or things like that? Then this market can still hold up relatively well. So look at the breadth of the market and the pace of the market. So widespread panicky fear just isn't present. You can tell by the pace intraday of the market. There's just things did get a little choppy, but it seemed like anytime there was a liquidation break intraday, that those pullbacks got bought up and rather quickly. So that kind of just takes some of the fear out of these things. It's like the sky is falling feeling really isn't there overall as of right now. We're chopping in a wedge formation, and that can resolve itself in either direction. So if we look at the SPY here right now in the daily chart, you're kind of chopping in this range here, but really what the pattern that has formed is this thing called a pennant formation. Is this pattern that's formed, this wedge pattern, and it's a neutral pattern. So you have lower highs and higher lows, and it forms this wedge, if you will. And the way that that can resolve itself hard up or hard down, and usually it resolves itself in the direction of the previous trend, which was up. Okay, so usually that's how it resolves itself. And so, but it would have to break out to new highs in order to do that. And in the meantime, you're stuck between two major moving averages. Okay, so I've been saying that when you're stuck between those two major moving averages, you can't expect too much. And so we failed to close above the 20 SMA, but we're still above the 50 SMA, which is this line right here. So expect more chop here, and sideways would not be unusual based on the seasonality pattern we saw. Sideways action here would not be unusual, but we're going to be watching to see on which side does it break out of this wedge. If it breaks the wedge to the downside, then we may be coming all the way down and testing this 50 SMA. If it breaks to the upside, could be testing this high or the all-time highs. So it could literally resolve itself either way. The purple predictor is predicting not much. We got, it's been choppy. It's been sideways chop on the purple predictor, and so it's not really super supportive or super unsupportive. It's very neutral. Okay, just so that now the Qs are more at the top of this wedge pattern. So the Qs have this wedge pattern as well, but when you look at that wedge, it's more near the top than it is near the bottom of the wedge. Okay, so whereas the S&P is kind of more smack dab in the middle, this guy here is more. It's really on. It looks like it's on the verge of breaking to the upside a little bit more. Okay, pre-market, of course, just a little bit off. So things are slightly bearish in the pre-market. So I don't know if that's going to break above that or not. But a lot of the semiconductors still looks pretty strong. And in fact, if you look at SMH overall, we're on a fresh channel breakout. There's a lot of individual stocks that are on a fresh channel breakout. Our old friend Micron keeps still going strong, and things like that. So for the week ahead, I would look to see what is the breadth of this market, what's the pace of the market. Look for continued fallout regarding the Fed. Although I think most of the Fed, uh, most of the Fed talk, we don't have another meeting for a while. So at least, I think it's end of July is the next meeting. But there could be some hawkish follow through regarding the Fed, but I think it's a little bit of an unknown right now. Okay, so as far as possible market movers, really no news of note, unless you're into home builders or something like that. But I think the real news that's worthy of note is not going to come until Thursday. Jobless claims, core PCE, which is related to inflation and the GDP numbers. So those are really the things. I think it's going to be a quiet week, maybe for economic news. It's definitely a quiet week for earnings. There's no major earnings until we get to Wednesday. Then our friend Micron is going to be showing its earnings then. So I think Monday, Tuesday, it's going to should be relatively quiet news wise. And so as far as the sectors go, we expect the strong sectors to be industrials, financials, and tech still, and the weak sectors to be energy. Depending on what happens, as if the Iran deal holds a little bit, the ceasefire somewhat hangs in there, then energy can continue to come down. It may not, but and then communications, and everything else is kind of middling. And then here are the actual additional earnings. So FedEx and the Micron, that sort of thing. So again, just in parting, let me just, well, actually, I'm not going to part yet because I'm going to actually get into our portfolio. But I just wanted to show this one more time, especially if you would like to engage in one-on-one, one-on-one coaching. I offer that, and in addition to the weekly memberships that we offer too. Okay, so let's look at our portfolio here. So we've done quite well in the year, way outperformed the market. LRCX was one that we're bullish on, and so we're in a very conservative trade on LRCX. This is a bull put spread, what we call a bull put spread, where we're short out to July at 300 strike, and then long just $10 lower. So we take in a credit when we put this trade on. We sell an option that's more expensive than the one we bought, so therefore we take in a net credit. And so all that has to happen for this trade to be successful is LRCX has to not suck completely. Okay, how do I define not suck completely? Well, the short strike is down here at 300. I said, right? So see this. I chose that because of this low right here. So as long as LRCX, and it has to do this for less than a month, okay, for less than a month, LRCX has to stay above this 300 level, which is somewhere around here, down below this low. If it can stay above that level for a month, less than a month, then we win. Okay, we can get our max profit. And so this is a very conservative trade. Now, it could have its pullbacks and that sort of thing. That's fine as long as it doesn't go all the way down here. You also have 50 SMA moving average support. We got moving average support here. The breakout level should support. To the bottom of this base should support. So we got lots of support in that along the way, and plus all the momentum is on our side and has been all year. So we expect this to be a high probability trade. So that's the way to use options when you're not exactly sure what's going to happen next, but get on the high probability side of a trade. And so that's exactly what we're doing on LRCX. And I can Lamb research it's in a very strong stock within a very strong sector, the strongest of sectors. And so we are anticipating that it's going to continue. Now we did a one of those iron flies on Mo. Okay, so on Mo, and we were slightly wrong on this, but somewhat right in that we're expecting Mo to stay within a tight range here, and it almost did. We probably could have gotten out of this maybe on Tuesday. We might have been able to get out with a profit. I know it was profitable at one point, but it finished weak on the week, and so for because of that, um, we actually got assigned on our short put, and now we have shares. Okay, a lot of times I like to resolve that before that happens, but in this case, I'm going to do something different because we're at the bottom of this really well-defined range right now. We are now holding shares. What I think I'd like to do is one of two things. I could either just put a trail stop on the shares. Okay, that's one way to go and see if it's going to get head back to the other end of the range. And then with a clear stop, at the low of Friday's candle would be our clear hard stop. Okay, whatever that low is. I'm seeing a low of 68.07, something like that. So if it drops below 68, we're out. Okay, no big deal. So that'd be there's another $100 of risk in there before we punch out. But it's got a lot of upside potential. So the upside potential is much higher than the downside potential. Granted, it's not exactly a uptrend, and it's not exactly above these key moving averages, but um, I think we could sell, just above that 50 SMA, right around 70. Or if you wanted to give it more room to run, we could sell a call around 71 near this high point and near the 20 SMA. Either one. And so the shorter, if I were to sell shorter term, like the end of this week, I'd probably go here. And if I wanted to go out 2 weeks, I'd probably go here, and they pay about the same. Okay. And so you pick up, between 40 and $50 just selling a call. Again, that's like a super dividend, if you will. And so what I would do is I would sell a call because I'm content to sell this. If I get assigned, because then if I did that, if I sold here around 70, I'd pick up another dollar in stock value, and I'd pick up another 48 dollars in or so in short call value. And if I get assigned at 70, that's fine. So that should leave us with um, maybe even a profitable trade. I'm trying to remember what I sold this for. I should check my tracker here because I've got to pull this off this side and get it in the right place. But my tracker, let's see, this Mo we took in, we're close to break even here because we took in a credit of 247 and we're down about that same amount on the shares. So I would say we're right at break even right now, but we could pull a $150 profit. Yeah, we're down on the shares 288. So we're close to break even. And if we just by selling that call, I could get us back to break even. And if we get assigned, we could either get assigned and be profitable, or we could not get assigned and continue to sell short calls until we're nicely profitable, maybe ride this thing all the way back up to the top of the range. So if you don't like having shares and you did get assigned like me, then just put a trail stop on the shares and forget this covered call business. But if you don't mind owning these shares and you want to do this along with me, I'm going to go ahead and I'm going to look to trade a short call. Before I do, uh, let me jump before I go ahead and sell a short call here. I don't want to mess up what I've set up here, so I'm going to go jump to that first before I sell my covered call. I want to jump to a new trade, and new trade is similar to this trade but on AMD. So let's go to AMD chart. So I'm going to put on a neutral to very slightly bullish trade. on AMD. And AMD is again stuck in this range here. It's slightly more bullish than bearish, so I'm going to put on a slightly more bullish trade. And so current price is at 537. I'm going to do another one of these iron butterflies. It's called an iron butterfly. And this is where we sell right at the money, but I'm going to sell slightly above the money, right? And so I would expect it to stay in a range plus or minus 20, roughly plus or minus 20. And so when I set that trade up, okay, so this is a new trade. Okay, this is not something we're in right now. When I set up that trade on AMD, it's going to look like this. Look at this. So I'm going to sell the 540 call and sell the 540 put. So it's basically a neutral trade, but because 540 is slightly higher than current price more like 538 or so, then we're going to be ever so slightly bullish, not a lot, and then plus or minus 20. And so I'm going to be buying the 520 put, and I'm also for protection, right? I'm going to be buying the 560 call for protection, which is above the high. Okay. And so when you do that, you're taking a credit because you're going to sell these options right at the money. Now, how did I find this one? I found this one by finding a stock that had extremely expensive options. Okay, so by being a net seller, I took in this huge credit. $17.30 looks like the midpoint. So I'm going to go ahead and put that on just one contract. So if I take in a credit of 1730 on a 20 wide iron butterfly, my total risk is what? My total risk is 20 minus the credit. Okay, so that means our total risk is about $270. 270. In fact, I'm tempted to do two of these. And so by the end of the week, the most we could lose is $270, but the most we gain is anything close to 1730. So way outsized reward to risk here, potentially. Now we're not going to pin the butterfly perfectly, and we're not going to make 1730, but we're just looking to scalp $100, $200, $300 and get maybe a 2-to-1, 1-to-1 reward to risk, and there should be easy to get if the stock can stay anywhere close to 540. We want price to stay close to 540. So I'm going to go ahead and put this on. I'm tempted to do two contracts, but let's just do one. Let's not get carried away. Let's just do one and then set, especially since I expect the market to be a little boring to choppy for the first 2-3 days of the week at least is my expectation. Okay, let's go back to Mo now. So I've got that order placed on AMD, and this is in the pre-market. So the market is not open right now, and so that won't fill just yet. So let me go back to Mo. And so for the covered call on Mo, I'm going to sell the 70 call that expires this week. Okay, so I'm going to sell one contract of the Altria Group call, and I can get somewhere around 47 to 57. I'm going to try to get 50. See if I can pick up $50 by the end of the week. And so that'll pay for a nice dinner somewhere. Okay. Maybe not a nice dinner, but it'll pay for dinner or a nice lunch. All right. So I'm bringing $50 and see if I can squeak our way back to break even or so on that. Okay. If I get a little bit of cooperation in the stock, that'll be nice. Then we're also trading a long call on Morgan Stanley. Okay, this was on a breakout MS. So the breakout, it broke out and it's still on a breakout. It pulled back. It definitely had a pullback, but it's still holding its breakout level. So that'll be where we're just basically buying the long call and riding it up. There's going to be an earnings at some point. We'll probably exit prior to that earnings in 2 to 3 weeks. So I don't expect to hold this forever, but if that implied volatility increases in that time frame, great. Now, the other thing we can do is while we're waiting to see what happens with that, we could, since it pulled off of the high here, we could go ahead and sell a short up around that 230 high. Since we pulled back somewhat, we could try to bring in some additional cash flow while we're waiting to see what's going to happen. So we could go there and go to MS and see if I could sell a short around 230. I could sell a short for about 120 bucks. That sounds good. And that's about $8 out of the money. I don't see why I wouldn't do that. So I'm going to go ahead and do that closer to the midpoint. Maybe I can get closer to 138 or so. I'll babysit this trade, try to get it filled at some point. So since I do this as a matter of course, I like to do this when I like to buy a call on a breakout. 223. Oh, wait a minute. Which one did I choose? Hang on a second. I might have chosen the wrong one. Monitor, open orders, working orders, 230 call. No, I did the right one. I'm not sure why it stuck it there. 230 is where I want to sell it, right? Chart. Maybe I read that wrong. 230. No, that's right. I did it right. I don't know why I put it there. That's fine. I just stuck something on the chart randomly. Not my fault. Okay, so so it's not unusual for me to do this maneuver where I'll buy something on a breakout. If there's follow through on the breakout, yay, I pat myself on the back, tell myself how smart I am. If it pulls back at all and creates a higher point, then I'll sell against it and cash flow. Because a lot of times, if a breakout pulls back some, it's usually only a matter of time before it works its way back to that level. But in the meantime, while you're waiting, go ahead and sell calls against that high point and bring in cash flow. So take a directional trade, turn it into a cash flow trade. I'm still bullish, but I'm more moderately bullish, and I'm going to bring in money, reduce my cost basis along the way. Ross, dress for less. Well, Ross call option is now worth less. So this was a boing boing trade on Ross that we put on last week, ROST. And so our expectation was that this would, after a little bit of a pullback, it would bounce. Well, it didn't pull back yet. And what happened is the 2-day RSI got even more stretched. Okay. It's at 14. It's almost down to 10. And I'm feeling actually even more bullish on the possibility of this bouncing. I'm really tempted to double down on this trade. I'm not going to until the 2-day RSI gets below 10, but it's close. So one more down day, or if it fails to bounce here, I may pick up another one. But really, this Boeing should still Boeing. Let me just look at what I have invested in this thing right now. So I paid like $5. I got $500 invested in this. I'm down 115 right now. I think I'll just leave it alone, but I'm tempted to double down. I really am tempted to double down. What I would say is if you're not in it, I would get it and I would take it at that price. And so now you can pick it up instead of $500. You can pick it up below $400. I would do that if I were you. So all right. So we put on one new trade with AMD. I have a couple more boing boing trades like that I'm interested in. I'm still holding a SPY bear put, okay, as a hedge in case everything falls apart. I may take that off this week if things stay cool and with the markets, and if the oil still continues to flow and everyone's happy, but until that happens, I have to be cautious because of the seasonality, because we've formed a lower high. And we're below the 20 SMA. I'm going to remain cautious for one more week. I may take off that hedge or modify that hedge. I could turn that bear put spread into a bull put spread if things get really bullish. But I'm going to wait and see on that. I'm going to leave that hedge on just in case things rip to the downside for whatever reason. Okay, not necessarily forecasting that, but I'm going to have that on as a hedge. In the meanwhile, I'm going to add. So I've got a bullish trade, a bullish trade, a bullish trade, a bullish trade and a bullish trade, okay, combined with a hedge. Okay, so I'm kind of mostly bullish now. I've kind of rotated from being a mostly bearish to mostly bullish, but I have a hedge on. Okay, and so I'm going to add. I'm looking about adding maybe one more bull trade and one more bear trade. So I'm going to still lean bullish for the individual stock picking. But I'm going to add one bull and one bear. So this is the bull I want to add. This is financials and other financials. And this is, again, a boing boing trade. So I'm going to buy a simple long call on T row. Okay, so I'm going to go to trade that T row. I'm going to go out about a month to July. It only offers monthlies. And I'm going to buy something with a 35 to 45 delta. So this 110 looks perfect. So I'm going to buy that, and I'm going to buy a couple of those, maybe three. Let's just keep things chill. Let's not get over our skis too much. I'm going to try to get a better fill. If I can get that for closer to $200, a little under 200, I'm going to put it in as a mid strike fill of about 189. Just doing two of those. So not a very expensive trade. Herman Sen and Sen. Okay, and then the bearish trade I want to put on. So that's a bull boing boing on T row. And just to recap, that was the July 110 call, two contracts. July 110 call, two contracts. And then the bearish trade I want to put on is this little stock called Schlumberger. Okay, because we're bearish on energy right now, and this thing looks like it's falling off the table here. This is based on a bow tie. Okay, well, what we call our bow ties indicator. Said that basically it's a groundswell indicator that tells me that overall this thing is rolling over and not looking good. So I want to do this as a bearish trade. I'm going to do it as a bear put spread. So maybe something like buy the 48, sell the, I don't know, 43, 48, 43, something like that. And give it some room to run. Okay, I'm not going to cash flow this one. I'm just going to simply look for it to come back, retest these lows. So if we could continued failure in energy, 48, 43 gives it a good $5 of room to run before we hit the short. So I'm going to go ahead and see what I can get that for. Schlumberger, again, I'm going to go out to about the July monthly, buy the 48, close to at the money. That's not giving me a price right now, so I'm going to do the 47.50 just because it's giving me a price in the system in the pre-market. And I'm going to sell, the 43 is not paying anything. So I'm going to sell I'll just sell the 45 for now. So 43, 45, hit control before I hit that. It's giving me a price at 45. So I'm going to do this, I'm make it a more conservative trade. I may adjust that as we get to the open, but I'm looking right now at a 47.50, 45. So a little bit out of the money. Yeah, about 50 cents out of the money and just giving it about 250 run. So it's one of those, don't ask me to do too much. There put spreads. So if this expires below 45, which you could easily do, then our this trade would be worth $2.50, and our cost is close to $1. And so it's got about a 2.5 to 1 reward to risk, and with I think a decent probability. And our break even, it doesn't have to go very far for us to hit our break even. So I'm gonna go ahead and confirm and send that. I'm gonna do, let's do three of those. Three. That's being very conservative. Maybe four. Let's do four contracts. So it's only less than $400 of risk. That seems really reasonable. Confirm and send and send. Okay, so we're bearish on Schlumberger. We just need that to continue its current momentum, and we'll go from there. That's all I've got for today. On behalf of Wealth Foundations Northwest, been my pleasure to have been your coach. Good luck, good trading, everybody. We'll see you next time. Take care. Bye-bye.